Welcome to Matters Financial and Geopolitical from a Frontier, and thank you for taking time out of your day to stop by here. Just to remind everybody that Mindspeak returns on Saturday, that's the 6th. We're at the Intercontinental, hosting Frank Matzert, who's the CEO of Trademark East Africa. And Trademark is sort of tasked with trying to help in the creation of a single market, reduce non-tariff barriers, and generally encourage trade in the region. And I think Frank will have a very objective bird's eye view of what's going on. We serve breakfast from 9:30 a.m. and it is a wonderful session, and do try and make it if you can. Home thoughts. I was talking with Maya Kolyeki, who's the CNBC Africa, East Africa Bureau Chief, and I said to her, "We have this wonderful jacket on." I said, "Maya, that's a tremendous jacket." Maya says, "Ali Khan, this is called deconstructive chic." Then she says to me, "Oh, my 4-year-old has refused to kiss me yesterday." And I said, I was horrified. I said, I told Hannah if she ever does that to me, my heart would shatter. And occasionally Hannah tests me, and very occasionally she throws her promise over if she's very, very unhappy. I like this picture from Banksy on Twitter. Puts out some very thought-provoking pictures. And this one by William Dalrymple, "The cosmic egg floating in the emptiness of non-existence." Turning me back to Rilke, "Everything is blooming most recklessly. If it were voices instead of colors, there would be an unbelievable shrieking into the heart of the night. There are quantities of human beings, but there are many more faces, for each person has several." Political reflections. The roving eye, Pepe Escobar, asks, will Russia, Germany save Europe from war? Are the United States, NATO and Russia on a mad spiral leading to yet another war in Europe? Is it inevitable? Pepe says, far from it. The US propelled vassal, currently starring in the oligarch dance in Ukraine, Petro Poroshenko, last week advanced the proposition that Ukrainians in the near future, after his reforms, will be asked to vote on whether to join NATO. Let's be serious here. Many of you will be familiar with the concept of shatter belt, territories and peoples that historically have been squeezed between the Germanic eagle and the Russian bear. As we stand, the whole shatter belt, apart from Ukraine and Belarus, has signed up to NATO. A new Berlin Wall, this time US built, from the Baltics to the Black Sea, now runs through Kiev. Were Ukraine to become a NATO member in an albeit remote future, the shatter belt buffer zone would disappear. This means NATO, essentially the US, planted right on Russia's western border, which was the point I've made severally about whom took the fight to whom. Washington has just announced it will be pre-positioning more military vehicles in Europe to be used in exercises or potential military operations. This is perfectly in tune with the relentless US think tank land spin that NATO and the US will be forced to balance their commitment to security in Eastern Europe against potential Russian aggression. According to Pepe, the ball is in Germany's court. Now it's up to East Prussians to present the facts to Angela Merkel. Let's see if she is able to get the message, Pepe says. And then counterpunch is saying what we're seeing in Ukraine today is a 21st century version of the Great Game, implemented by political fantasists and Kool-Aid drinkers who think they can turn back the clock. Let me explain. The Obama administration is trying to rebalance US policy in a way that shifts the focus of attention from the Middle East to Asia, which is expected to be the fastest growing region in the coming century. This policy change is called the pivot to Asia, In order to benefit from Asia's surge of growth, the US plans to beef up its presence on the continent, expand its military bases, strengthen bilateral alliances and trade agreements, and assume the role of regional security kingpin. The not-so-secret purpose of the policy is China's containment, that is, Washington wants to preserve its position as the world's only superpower by controlling China's explosive growth. In order to achieve its goals in Asia, the US needs to push NATO further eastward, tighten its encirclement of Russia, and control the flow of oil and gas from the east to the west. These are the necessary preconditions for establishing US hegemonic rule over the continent. And that is why the Obama administration is so invested in Kiev's blundering junta government. It's because Washington needs Poroshenko's neo-Nazi shock troops to draw Russia into a conflagration in Ukraine that will drain its resources, discredit Putin in the eyes of his EU trading partners, and create the pretext for deploying NATO to Russia's western border. Both articles are making very valid points. I'll put up an image of foreign currency rates against the Russian ruble. As seen yesterday, December the 1st, the ruble fell 9.3% last week. Worst drop among 24 emerging market currencies tracked by Bloomberg. And then yesterday tumbled another 8% before bouncing. Saying a significant part of ruble speculators have abandoned the market and the current sell-off is purely a result of weaker oil. With crude at $70 a barrel, the currency would reach equilibrium at about 50 to 52 rubles per dollar. My conclusions are that President Obama, while certainly getting creamed in the midterms, has been a very subtle, skilled and hard-nosed exponent of currency and now oil warfare. The plan to undercut oil was exquisitely constructed and executed. The Russian ruble has been crushed. The Russian central bank has dropped $100 billion defending the currency. This, in my opinion, is a very 21st century shock and awe, and that's without even a bullet being fired. Put up a photograph of President Obama and the Russian President Vladimir Putin. And then an interesting report saying the first footage surfaces of an Iranian jet seen attacking ISIS targets in Iraq. Iranian Air Force is bombing Islamic State targets inside Iraqi territory, intensification of Iran's military involvement on the side of the Shia regime of its neighbor, and most likely also a sign of its alleged coordination with the US military, which is leading the international coalition against ISIS. The report mentions Iraqi jet fighters, but the plane seen bombing ISIS positions is an F-4 Phantom, which is not in Iraqi service. And I agree with this comment. They wouldn't be risking these planes in American-dominated airspace if they hadn't received assurances that they were liable to be shot down. The Phantom captured by an Al Jazeera camera crew is proof that coordination between the two sides is going on at some level. I'll put up a photograph of Premier Yang Yi-hua, who signed the cabinet's resignation order in Taipei, Taiwan. Interesting development there, because the pro-China government has lost very, very heavily. I like this photograph, the Valley of the Shadow of Death, taken in 1855. Fenton took two images of a ravine that had come under cannon fire by Russian forces during the Crimean War. Certain scholars believe he added the cannonballs into this photograph to make it seem more dangerous, which could make it the first ever manipulated image. Euro 124.65, got over 125 yesterday. Dollar index 88.04, Japanese yen 118.46. Swissy 0.9654, pound 157.27, Aussie 0.8506, India rupee 61.977, South Korean won 11.0577, Rial 256.02, Egyptian pound 7.15.17, and the rand at 11 the figure. I'll put up a 3-month chart of the dollar index. We're in a bit of backing and filling right now, but I think it heads towards 100 next year. Euro dollar, I'll put up a 3-month chart. That's found support at this 124 level, which, as I told you before, was a strong congestion resistance on the way up. I think we'll break down through this and touch parity in 2015. Dom Perignon reboots the 1998 vintage in sexy new P2 bottling. I'll put up a photo of this new P2 bottling. I like this description. The wine is all about magnetic energy, and they used Iceland as a backdrop. Iceland looks quiet, minimalist, but under the surface everything is bubbling and surging. Gold enjoyed a very strong spike yesterday, last trading at 1205.835. I'll put up a 1-month chart. I still think we'll go below $1,000 next year. Crude oil also bounced, last trading at $68.44. My target remains $50. As I said on the 1st of December, the US has emerged as the new price setter for oil. The meeting in Vienna merely confirmed that the US has wrestled control of the oil markets. President Obama, while getting creamed in the midterms, has been a very subtle, skilled and hard-nosed exponent of currency and now oil warfare. This plan to undercut oil was exquisitely constructed and executed. The Russian ruble has been crushed. The central bank has dropped $100 billion defending the currency. Iran might have got an extension, but the new oil price normal keeps them on the ropes. Venezuela's oil income has fallen by 35%. I described this new oil and currency warfare as a very 21st century shock and awe, and without even having to fire a bullet. I'll also put up a 3-month chart of crude, $68.44. Target remains 50. I like this letter to Mwalimu, letter from the future to Mwalimu Julius Nyerere, with whom it all began. This is the East African Community's Secretary General, Dr. Richard Sesibera. Shikamu Mwalimu. Next week, the summits of heads of state of the East African Community will take place in Nairobi, Kenya. The heads of state summit didn't take place. The community is currently chaired by Uhuru Kenyatta. Yes, sir, you may share this news with Mzee Kenyatta and Mzee Milton Obote when you see them. The EAC did not die permanently in 1977. It has been resurrected and is thriving. I am writing to seek your wisdom and blessings. You see, when the summit meets, they will be deliberating, among other things, on the best way to start a constitution-making process for the Federation of East Africa. Yes, the debate is back. You remember those many years ago in 1963 when you offered to delay Tanganyika's independence to give a chance to East Africa to get its independence as a federal entity? You feared that entrenched sovereignty and the trappings of national authority would blind us to the strategic imperatives of building a united East Africa, capable of harnessing all its resources for the socio-economic development of its citizens. You were worried that narrow parochial concerns would lead to the marginalization of our continent. You saw clearly that independence within the borders of colonial constructs would simply reinforce the colonial enterprise, marginally tweaking the relationship between the former colonies and the metropole, while leaving the colonial enterprise intact. Well, sir, you were right. Can you imagine that by 2005 the entire GDP of East Africa was only $40 billion, the wealth of one modern high net worth individual? That our fragmented economies remained stuck in the mud for decades, trying to produce more cotton, coffee, and raw minerals for the consumption of the Western world. The harder we worked, the poorer we became, until we were told that the only solution was to reduce our investments in health, education, infrastructure, and energy. We did need macroeconomic discipline, Mwalimu, but we balanced our books on the backs of the poor. We were too weak to resist, our valiant struggle against apartheid notwithstanding. We all agreed to take the medicine. Our current leaders have decided to reverse the trend. They have decided to go back to the future, and they are succeeding. East Africa is now a customs union, and we are slowly turning it into a single customs territory. Beyond the free movement of goods, the region is now slowly but surely turning into a common market. Plans are underway to build a monetary union. Bad idea in my view. Shared investments in infrastructure are gaining momentum. Remember when you decided to invest in the Tazara Railway against all opposition. You may be saddened to hear that the line now carries less than 10% of what it did in its heyday. I am glad to report, however, for the first time in over 100 years, Kenya and Uganda are beginning to lay a new modern railway line. Rwanda and Burundi are determined to follow suit. Investments in energy generation on the rise. East Africa is determined not to be a dark region, but both figuratively and literally. Did you know, Malima, that since East Africa decided to deepen and widen its integration, its GDP is now over $100 billion and growing? Over 700,000 students are enrolled in 344 institutions of higher learning. There were those who kept telling you that East African integration would benefit Kenya to the detriment of Tanzania and Uganda. Plus ça change, plus ça la même chose. Yes, we do speak French and Chinese in addition to Kiswahili, our lingua franca. I forgot to inform you that Burundi and Rwanda are now members of the community. The Pan-African seeds they planted have come to fruition. There are still some people fixated on intra-EAC competition rather than cooperation. Fail to appreciate that Kenya is now a major source of FDI in the EAC, displacing the Western powers of yesteryear. The intra-EAC trade has risen to over 26% from less than 10% a decade ago, qualitatively better than trade with the rest of the world. So in this context in which heads of state summit will meet this coming week, they refuse to simply accept what is and want to invest in what can be. They want to turn East Africa into a federal entity, believing that economic integration is not enough. They want to follow in your footsteps, Walima. I'll put up a link for the Mindspeak session with the Secretary General, Dr. Richard Sesibera, and go back to his first Mindspeak when he started by saying, "This is Africa's century." South African all-share closed below 49,000 for the first time since October 30th, fell 2.11%, remains 5.625% higher year to date. Dollar Rand at 11 the figure. I think there's a chance we see 12 next year. Egyptian pound where it's been around the 715 level. Egyptian stock market fell 0.8% but remains 36.139% higher this year. Nigeria fell sharply 1.82% yesterday. Nigeria is down 17.941% year to date. On Monday, the Naira touched a fresh all-time low of 184.42. I'll put up a picture of the graph as seen by as printed by FastFT. Paul Wallace, someone I follow on Twitter, tweeted showing the correlation between the Naira and Brent crude prices. And I remind you that on the 19th of November, I said the currency heads to 200. The central bank does not have the firepower. On the 24th of November, I wrote Nigeria in the eye of the storm. That link is on Rich Wrap-Ups. We learnt that militants attacked 2 North Nigerian cities and fired on an Air Force jet. Insurgents launched a raid on Yobe state capital Damaturu at dawn. They set fire to a mobile police station and shot an Air Force jet that was circling, shot at an Air Force jet that was circling their forces and dropping bombs. Later in Borno State, Maiduguri, 2 blasts tore through a crowded marketplace. And then this fellow saying, I saw military jets circling 3 times. People have abandoned their vehicles on the road and gone home. Another resident hiding behind a gate said he saw the militants driving down a road in police vehicles and an armoured vehicle trying to shoot down the plane. They mounted anti-aircraft guns and they're trying to shoot the aircraft that was bombarding the town. They were all turning their heads shooting. On the 10th of November, I wrote a piece saying, turning to the markets in Africa, the Nigerian Naira and the all-share index have been wagadooged by the collapse in the price of oil. Ghana Stock Exchange eked out a 0.12% gain yesterday. Here in Kenya, very bad news again. At least 36 people have been killed in an attack on a stone quarry in Mandera, northern Kenya, local forces told Al Jazeera. Gunmen opened fire at the quarry in the early hours of Tuesday morning after separating Muslims and non-Muslims. The dead are reportedly miners who were working in the quarry, located just outside the town. The scene of the latest attack is about 30 kilometers from the November 20 raid on a bus in which 28 non-Muslims were separated from the Muslim travelers before being executed. Al-Shabaab have now claimed responsibility according to the latest news feed. The shooting in the quarry comes following an attack on a nightclub in the town of Wajir on Monday night as well. On the 8th of September this year, I asked, are we headed into a new Waziristan-type normal? In a piece called The Insurgency Tail Risk. This morning I was on CNBC when I spoke with Maya before I went in for the interview with Bonnie Tunya, and we were talking about exactly this. 19th of May, I said the dashboard is blinking amber. I started with Don DeLillo, who wrote in Point Omega, when you strip away surfaces, when you see into it, what's left is terror. This is the thing that literature was meant to cure, the epic poem, the bedtime story. This was written in May. There is an enormous conversation and hullabaloo going on, and we search this for signals. And the signal in the social media space is very loud and clear and unanimous. We are being spun an epic poem, the bedtime story. And I said disbelief can be suspended, of course, but that eventually we reach a Marx Brothers in duck soup moment. When Marx, I think it was Groucho, asked, well, who are you going to believe, me or your own eyes? And I said in May, if you mind social media like I do, you will know that that duck soup moment was crossed during Westgate. And continuing resolutely down this path is eroding political capital. And I finished with Gladwell. Look at the world around you. It may seem like an immovable, implacable place. It is not. With the slightest push in just the right place, it can be tipped. And I was saying everything looked very fragile then. It looks a lot more fragile now. I put up an image of Westgate that I took 434 days ago. And refer you back to something I said in September 2012. My concern remains that what appear like uncorrelated spikes and paroxysms of violence conflate, become more broad-based and amplify. Kenya shilling was last trading at 90.20. A business sentiment index that Standard Chartered put out rose to 62.1 points in November from 53.4 points in October. Kenyan large firms and SMEs expect business to improve, driven by a bump in consumer spending. Well, that's valid. Oil prices are also going to support during the holidays and increase sales to the East African region. The Nairobi all-share rallied 0.54% yesterday. It's up 20.1244% year-to-date and less than 1% off below a record high reached on September the 23rd this year. Safaricom up 32.445% on a total return basis. Have a look at the interview I did with Bob straight after the first half earnings release. EABL has rallied 12.5% over the past 4 weeks and is at a 16-week high. I'll put up a picture of Charles I like, where we were at a party, Johnny Walker party. You can see Chris Karubi there as well. And I'll give you a link for an interview I did with Charles regarding his results. Centum, which is up 84.84% year-to-date, traded 25.196 million shares yesterday, which was 3.78% of its shares. KCB Group closed 0.847% below a record high yesterday. Have a look at the interview I did with Joshua in November, and he has the least cluttered desk of anyone I know. The NSE 20 is up just around 5% year to date. Obviously, events in Vienna and an OPEC meeting last week continue to reverberate around the world. Crude oil continues to crater, notwithstanding a sharp bounce yesterday. WTI got as low as $64 yesterday. In my opinion, this should see fuel prices adjust sharply lower and will provide a meaningful stimulus for the Kenyan economy. The challenge on the oil horizon was outlined by Africa Oil, which said this month its plans in Kenya might be brought into question if the long-term outlook saw prices dropping below $70 a barrel. Therefore, I expect mothballing, which might last as long as 24 to 36 months. And I think if we don't look at the regulatory scenario again, we'll have an even more complex scenario. East African oil and gas, if it were listed on the Nairobi Securities Exchange, which it isn't, is the worst performing sector. Tullow oil down 50% this year, Africa oil down nearly 68% this year. Centum, there was a very big session yesterday, 2.026 billion shillings traded, but Centum was the big trade there, traded 75.82% of that total turnover. The Nairobi All Share has been lifted on muscular big cap action. Safaricom plus 0.72% back at a record. KCB within less than 1% of a record, and EABL at a 16-week high have lifted the All Share. Kenya Airways closed unchanged at 8.25. Airline stocks have soared worldwide. As investors anticipate the savings, airlines will win from the sharply lower oil price. Kenya Airways has yet to participate in this rebound, and essentially investors are looking for clarity and visibility on Kenya Airways' hedging policy and whether the hedges have been removed. Leaving them in place is going to be really problematical because there's going to be a humongous mark-to-market hit. The CFO was effusive in his praise for the hedging team at the half-year earnings release. Let's see what their cloth is cut off, what their suit is made of. Uchumi rallied 2.2% yesterday, but I think Jonathan, who did such a fantastic job as a receiver, simply is not primed to lead the growth path now. It's not about receivership, it's about growth, and I don't think the rights issue is sufficient. They've got to team up with someone. Centum had its heaviest session of the year. It's up 84.84% year to date. Profit after tax, first half accelerated 38%, big trade. KCB, as I said, it's within less than 1% of a record. Standard Chartered was firm, up 1.5%. It's a cheap share, point of fact. Total was the biggest gainer, up 7.216% yesterday. If you want to track the stock market, just register on rich.co.ke, get a password, go to Rich Live, and you can track the stock market in trading hours. Once again, thank you for stopping by.